Hey, this is Jerry Citarella doing another video with Prosperitas Financial. Today I have a really exciting topic, term life insurance. Don't click away, don't click away. This is an important topic, even though it's not exciting, I'm gonna make it exciting. So there is some confusion about life insurance in general, term insurance versus permanent insurance. And a lot of people call permanent insurance whole life. That's actually one type of it. But the basics are, term is something that will last for a period of time. Permanent is meant to be around forever. We'll talk about that later. So term insurance, what is it? Why would we use it? Well, simply put, it's insurance on your life that is in place for a certain term, a certain period of time. Now that could be 5 years, it could be 10 years, it could be 20, it could be 30, it can even be 1 year annual renewable. We don't see many of those anymore. What's most typical is 20 or 30 years. What does that mean? It means you have a certain amount of life insurance coverage for that period of time, and the premium is designed or guaranteed to remain level, okay, level term. Now, what does that mean again? It means you get the insurance today. If you were to unfortunately pass away, die, any time between today and that time period, then somebody, your beneficiaries, would receive a tax-free benefit of whatever the face amount was, whether that's $100,000 or $100 million. And it lasts for that period of time. Now, at the end of that period of time, when the term is over, it technically doesn't go away, it just becomes ridiculously expensive. So you have to consider it a 20 or 30 year term. So a lot of people say, well, I don't want that. I feel like I'm throwing money away. Well, yes, you are, hopefully, because that means you outlived that period of time. So why would we use this? Well, we would use this if you have a large need, but you don't really have the budget or the desire to put a lot of money into the insurance like it would cost for a permanent policy, which there's some benefits to, and again, that's another topic. But let's just say an example, newlyweds, in fact, Brooke behind the camera just got engaged the other day. Yay, Brooke. So she's gonna get married, she's now 2, and probably in some period of time, they may be 3 or 4, or who knows, maybe 5. And there's money coming in for both of them currently in the form of income. And maybe while she has 1 or 2 of them, maybe there's no more money. Maybe she quits her job, or maybe she continues her job. But either way, there's now a need that is pretty large, because if something were to happen to her fiance, we're gonna kill off your fiance, not you, in an unfortunate accident, a disease, or anything else, what happens? His income goes away. There's still a need to live, there's still a mortgage, there's still 1 to 3 mouths to feed, colleges to pay for, soccer cleats, club baseball, travel, all that stuff still has to be paid, and it's a pretty big amount. So where we typically will use this is if there's a large need, but also a need to do other things like college savings, like retirement savings, like eat, travel, whatever you want to do, because this is the least expensive way to cover the large need. Now, why would you do different terms? Well, if you have 3 kids, and let's say they're all born about the same time, maybe you do a 20-year policy because the need will be bigger while they're of a younger age and there's longer period of time to take care of them. And then maybe once college is paid for, they're in college, your need will go down a little bit and that policy can go away. So very often what I'll do is 2 policies, a 20-year and a 30-year, or a 15-year and a 20-year, depending on the needs. So we're not gonna go in detail on the needs. Just know this is the least expensive way to take care of a large need, and I'll say it every time when I provide somebody with one of these, and I've been doing it since 1995, I hope we just wasted a lot of money, because that means you outlived the term, but in the meantime, you cannot go without it. These little ones did not ask to be here. You brought them here. You have a responsibility. If you're the main breadwinner and you have a spouse, either male, female, doesn't matter, that has no income or very little income, what happens when your $200 or $250 or $80,000 goes away? How do they survive? They need to be covered. Term insurance is the perfect solution for that. So, term life insurance is a very inexpensive solution to a very large problem, taking care of a family member or family members that are left behind if something were to happen to you. It's very affordable. Yes, you're potentially throwing money away. There are some that return premium at the end. They're more expensive. Again, we can talk about that. Lots of details, basics, big need, small price, a term that can be designed around your needs to take care of a problem. Give me a call if you have any more questions at 661-255-9555, extension 111. Go on our website, prosperitasfin.com. We're happy to help even with the boring stuff, term life insurance. Thank you.